you guys are lucky because you are taught company law by nobody other than myself, who is a company director. Because I thought I've been talking about these things for so long, I gotta try it out. So all the things that we do together, I did for myself. And I realized there are actually easier ways to do them than the ways in which I'm telling you in the lectures. Yes, so there is some updating to this information, at least from a practical perspective. I set up my own company and I went through the entire process thinking, what is it that I'm setting up for? What is the potential client that I can have? What is the best way to set up the business, to choose a name, to position it against other businesses that might be in the area? And what am I trying to achieve? And what is the client potentially trying to achieve? And what they expect to see? And how to get all this done? And then all the practicalities of it. How do you go through the process of thinking about this, devising a strategy, first of all, which is not a legal issue. The strategy is not legal, is practically focused. Why am I trying to do this? If I'm an entrepreneur and I've got a plan for running a business, what is this plan and how should I operationalize it? And then the legal parts. What does it mean to actually register a business? What type of business do I want to register and how do I go about this? So parts of exactly what a company is and what is it supposed to be for, and why would you need to do your business or to run your business through this form of supposedly a company as opposed to just doing it. Now, by the way, question for the audience. Are you allowed to just engage in business by yourself? This country is great for promoting people's activity. And most of the concerns in running your own business come from potentially tax implications and things like this. They're not an issue of authorizations and licenses. So if I want to offer consultancy, as I've been doing for a very long time, I can just do it as myself. I don't need to get the license from anybody. Of course, there might be restrictions that come with other engagements that you have. If your employer, for instance, does not allow you to have side jobs or do something else, if there is that type of restriction, then it's a contractual problem that either you need to find a workaround or you need to negotiate with your employer to get some sort of release. That's absolutely fine. So that could be a legal restriction into the kind of business that you can pursue, but it's not a legal restriction from the state or a regulator. It's a legal restriction from activities that you yourself have engaged in. So if the university said, we don't allow you to write for a publisher, we don't allow you to be an external examiner, we don't allow you to kind of help other people set up their programs or whatever it is without our permission, I would be under a contractual obligation to go through that. But in the absence of this, I don't require a license. If I'm talking to somebody and I say, this is what I do, or, I make videos or whatever, and they tell me, well, would you like to, we would like to explain a concept to our employees, we're having these workshops, everybody falls asleep, would you like to make a video about it? We'll pay you like £500. And I say, sure, I'll do it. It's fine, it's not the problem. I don't need a state authority to allow me to do it. Now, how do I get taxed for it? Happy enough, HMRC says, if you engage in activity as a sole trader, you don't have to tell us so long as your revenues do not exceed £1,000. So the revenue itself will tell you, if you're making minor profits out of minor jobs, we don't need to know. It's pointless to go through the paperwork for us to collect tax on the first £1,000. Only if your turnover becomes significant enough that it generates tax liability beyond this £1,000, then you need to register for self-assessment, which means that you make your own tax statement in this country, right? And you tell them how much you made, and then if there's some tax to be paid, then this arranges for the tax to be paid. This can be if your self-employment activity is your sole income, or it could be if it is something in addition to you being an employee for somebody else. Message for you guys, if you want to do something on the side, it's perfectly fine. And so long as your income doesn't exceed the £1,000, you don't even have to tell anybody, and you're 100% legal and compliant. You're selling stuff on eBay, right? You could do crochet. Did you know that crochet swimwear is a thing? And people make a lot of money out of crocheting swimsuits that then they sell on eBay, on Vinted and stuff like that. It's a legit business, perfectly fine. You could be an influencer. You can have like a massive Instagram account and you make money out of ads or you get sponsorships and whatever. The money that you make out of this, you're allowed to in your own personal capacity, and that is perfectly fine. If you would like to do some of the stuff that falls into specific categories, then you need to think about permissions. You cannot offer legal advice, because if you want to offer legal advice, and you will need to check this if you want to join the profession, there are certain things that are controlled. You cannot just offer legal advice to the public if you are not officially a lawyer. So in our purposes, a solicitor or a barrister, and within particular contexts as well. So if you are a self-employed solicitor, meaning you don't work for a firm, but you just work by yourself, again, for certain types of advice, you need to register with the SRA with a particular way, so then you have a professional indemnity insurance, so that stuff. Now, if you are in a professional capacity that has add-ons, that you might need professional indemnity insurance, that you might need the authorization of a regulator, you cannot be a doctor on your own just because you decided to, or a nurse, okay? These things are controlled. Or you cannot deal with substances that might be prohibited. You cannot be like, I make my own gunpowder and sell it on eBay, okay? Or I make my own fireworks, because these things require authorization. But again, these are restrictions that have to do with other parts of the law that don't have to do with the part of the law that is geared towards business and entrepreneurship. So if you could, all of you could start doing business right now and earning money, and you can just do it in your own name. How do you make the leap from that? Your ability as a person to engage in business, make money out of it, deal with the tax implications and stuff later on. How do you go from that to the idea that you need to have a structured business behind you? Why would you adopt a business organization form where you can do this stuff already? Why would anybody go for business as opposed to just doing all the stuff that we described by themselves? So the money issue and separating business finances. So let's go, it's business regardless of form. Whether you're working as self-employed or you're working through some corporate structure, it's still business, right? The difference between business in your name and in business through some sort of organizational form is the separation of the money. The very big danger of you doing business in your own name is that everything you have is exposed to the business in the same way that you have freedom to deal with the business money for yourself. If I make a video for that guy who said do a little training video and I'll give you 500 pounds. If I do this, then he sends me the 500 pounds in my own personal bank account. I can spend it like immediately. I can go get myself with 500 pounds. I could probably get an older version of a used iPhone. I don't have to ask anybody for permission. I don't have to keep any paperwork. I don't have to do anything at all. The only thing that's going to register officially is the fact that there's 500 pounds income coming, but what I do with that income is my business, in exactly the same way that what I do with the salary from the university is my business. But what's this? I make a video, the guy thinks it's fine, showed it to the people in the business, one of the people of the business likes it, takes a screenshot, puts it on Twitter. The people from Adobe look at it. They realize that the screenshot is an image from Adobe stock. They're thinking, that's fine. That's one of our images used for commercial purposes. Let's check if the guy who made this has a license. They look it up. They realize that I don't, because I just Googled the image and I stuck it in there. And then they sue me for copyright infringement, which can totally happen. Now, I'm thinking, I'm dancing wrong. That's what I do all day long, right? We can download pictures of Google and we put them in our slides. But what I forgot is that this was a commercial engagement with that guy. It was not in the context of teaching. But if you do something commercial, or if I take the video I made for the guy, and I put it on YouTube to share with others, I will get a copyright strike immediately the moment somebody notices that the music I'm using or the images I'm using belong to somebody else. And then they will sue me. And you're thinking, like a one image, what would be the big deal? How much is that? Filipinos, you don't know what it is. Yeah? Because if you remember your contract law classes, they're going to claim for loss of profits, a variety of other things. So depending on what the violation is, there could be significant cost. There could be a cost that exceeds the £500 that I got paid. How am I going to cover that liability? By my own money. So the way to avoid this, or one way of dealing with this, could be some sort of insurance. But of course, insurance doesn't cover you for your own intentional faults. So you cannot get professional indemnity insurance and then buy yourself the license to be negligent in the way you carry out your work. That's not how it works. But you can use specific corporate forms to diversify which part of the business activity, which part of the money is you as a person, and which part of it is the business by itself. For example, the company I set up has its own money. It has its own bank account. I've got a bank card that is in my name because I'm the company director, but the bank card and the account belongs to the company. Meaning that if I do business, the money that people pay me for the work that I do, it comes in the company account. The money that I pay out needs to be linked to the company, and it comes out of that account using that card. If I was using a corporate structure to carry out my business, and if something went wrong, the business has its own capital. It consists of the initial money that people pay in when they purchase a share of that company. That is usually very little. My company was set up with £1. So the initial capital was £1. It might contain other money where people have made contributions along to the company to allow it to operate. For instance, my company needed a loan to start paying for stuff. Why? Because it had expenses from the word go. So the company was set up, capital was £1. However, I needed to pay for an office address, I needed to pay for a website, I needed to pay for a domain name. Where's all that money going to come from? The company didn't have any income yet. I would have either set up the shares at a much higher level, which is a very bad idea for reasons that I won't explain in other classes, or I would need to make a loan to the company, which is what I did. And once the company started running and generating revenue, and it's got its own money, then it pays back the loan, that's fine. And then it keeps its own money. I cannot, if I want a new iPhone, I cannot use the company's money. Actually, I can use it once because HMRC will accept as tax deductible expenses a phone line, internet line, phone. I could buy 5 if I had 5 employees. But if I'm on my own, because otherwise, anybody who has a company would just buy everything for their friends and then pass it as company expense. Now, what is the benefit of this? If something is an expense, it gets deducted from your incomes, therefore you don't pay any tax on it. Anything I earn as an individual, if I'm working as a sole trader and goes into my normal self-assessment, it gets taxed at the normal rate of tax. So in my case, anything I make extra would be taxed at 40%. What my business makes, if it's all spent, then there is zero tax liability. So if somebody pays me £1,000 to do something for them, and then I use this £1,000 to buy an iPhone for the company, the money has been turned from cash into an asset, but because it's been spent, it's got zero tax liability. So I basically got my iPhone with a 40% discount, which is terrific. But you need to be careful how you do these things. Now the corollary is separate business money, separate Yannis money. If the company goes bust because it meets a liability that it doesn't have enough money in to take care of, so if after all these businesses that I've done, the company has got, say, £10,000 in its bank account, and I'm hit with a liability of £100,000, what happens then? If the company cannot pay, what happens to a business when they run out of money? They shut down. I make my video, I post it, somebody notices a copyright violation, sues me for a great deal of money, the company is kaput from the word go because I wouldn't even have enough capital in the company to hire the lawyer to defend the claim. So I could just acknowledge the claim and go bust and not pay I'm a wealthy individual because, I've got a lot of money, I've got bank accounts, I've got jobs and whatever, and I'm running like a small business that is separately incorporated on the side. If that small business is undercapitalized because it's a small business, it doesn't need a great deal of money, but out of bad luck, something happens, like somebody sues me for something I didn't see coming, then it doesn't matter how wealthy I personally am. The business is a separate entity, and it's only the business that people are engaging in. Now, in reality, though, guys, if you are you run a small business and you approach somebody to do something with you, they're not just gonna do it if they don't trust you. So you cannot go to a bank and say, "Hello, I'm the director of my new business, Scammy Scams Limited, and I would like a £100,000 loan, please." The bank's gonna say no. Or if you wanted a £10,000 loan, they're probably going to say yes, but they're going to say, "We want you to give a personal guarantee on the side." So if there are contractual mechanisms to make yourself co-responsible because nobody trusts a business that is undercapitalized. So in reality, it's not really that easy to hide behind a corporate form to do big things. Small business is to start things going. Yeah. And then how big the business is or how reliable the business is reflects all the type of client you've got, the expectations of the client, and how everything sells. But to come back to the topic that we're discussing today, why do people form a company? One of the key reasons is the separation of the money. And an associated reason could be clarity as to who does what. And what are the responsibilities and obligations of the people who are engaged in that business. Our scenario is that one person is like a sole member company, they do everything by themselves. But that's not usually the case. Usually there are more people around. If you're working with a colleague to get something done, then things become complicated if you don't have a specific organizational form to support your business. How often do you get into arguments with your friends about things you're trying to organize? I mean, most people are unable to organize a birthday party, never mind a business. If you go to a restaurant and try and pay with your friends, it's mayhem, right? So it's like, why am I going to pay for this? Why are we splitting equal ways? You had a Coke, I didn't have a Coke. Who got the garlic bread? Imagine this now, if you're actually running a business that becomes significant or a business that you're making a living out of. There are ways that you can organize officially with other people so you don't get into that sort of trouble. A partnership is a business form that the law recognizes. So there are specific rights and obligations that comes out of being in a partnership with somebody. So obviously you cannot be in partnership with yourself, you need to be in partnership with somebody else. The partnership is also a matter of fact. You don't need to take any steps to set up a partnership. It happens because it's already there. The law recognizes the arrangement you already have. So yes, once you get into the type of business that involves other people, things might become more official by default. But even in that case, there are a lot of people who prefer to take the steps to set up a company to operate through that as opposed to a partnership. If we're talking about your traditional company that offers this separation, this is a significant motivation into having a company. The partnership will not automatically give you this. So the partnership offers you like the legal structures and the law that has developed around it. They're mostly to help the other world, people outside, to understand who they're dealing with if they're dealing with one of the partners and the extent to which each of the partners represents the partnership for business deals and so on. And also to set up rights and expectations between the partners themselves. However, there is no strict distinction between the partner's personal life and personal assets and those of the partnership. So people are exposed not only because they're responsible for what the other partners are doing, because it's a common thing. It's as if you're renting a flat with somebody and your rental agreement says jointly and severally liable. That means that if one of your friends runs off and doesn't pay the rent, you still have to pay it. So you cannot say we were splitting 3 ways, one of them left, so we're only giving you 2/3 of the rent. The landlord expects 100% of the rent from whomever's left. So the partnership works like this. There can be multiple partners that each single partner is responsible for the totality of what's going on. And also a standard partnership, because there are other types, but the standard partnership does not give you this built-in distinction between business and personal finance. So not only you might find yourself liable for what the others are doing, you might actually go into your own personal money when the partnership does not have enough money to meet a liability. But in terms of organizational structures, you can work on your own as a sole trader, no problem, and super easy in this country. You can set up a company if you want to do things formally, or if you're dealing with other people, you could be in a partnership. These are the three key avenues to running a business. You got the limited liability partnerships. Have you noticed if you go to a law office that most of the time the sign says blah blah LLP? So this is the limited liability partnership. Is a new form, relatively new form of business that combines some of the elements of partnership and some of the elements of company. So it offers some limitation of liability, not as complete as the limitation of liability you can have for a private limited company, because some stuff you're still responsible for. But it also offers some of the tax advantages of having a company as opposed to having a partnership. So it's good for professional type businesses, lawyers, accountants, consultants. When lawyers are part of an LLP, they make a contribution to the business in order to become partners. For instance, when you become a partner in a law firm, you need to make a financial contribution. You effectively buy a stake in the business. But if it's an LLP, then that is the totality of your exposure. So if the business goes bust for some reason, they will not come after your personal wealth. So it creates this separation between the money you have contributed or participated in the business and the money that is personal. But it's not fully a corporate form. Because it's believed that a full corporate form might not be suitable for professional services. It requires a great deal of disclosure that they might not want to make. Just kind of in between house to cater for particular types of professions that needed something that offers an element of limitation of liability and some of the tax advantages, as you have in companies, but they didn't want to go the cold hog and register a company. Now, don't get me wrong, it's possible to have a private limited company that offers legal services. Because legal services in this country have been liberalized a few years ago. So now it's possible for something that is registered as a profit-making business, as a limited liability company, to offer legal services. We have the key distinction then between what happens if somebody does stuff by themselves, what happens if they do it through the form of a company, and what happens if they do this through the form of a partnership. Now, there are, of course, different types of companies. The two key types are the private limited company, which comes to the LTD that you see very often, right? Most of the things are LTD. My company is an LTD. And you have the public ones. Now, a public limited company, a PLC, is something that has slightly different organizational features. The key is how open it is to investment from people outside the company. If you set up a private limited company, the initial set of people joining in are probably going to be the permanent people in it. And if you want to bring other investors in the form of shareholders, you need to go through rather burdensome processes to incorporate more people into the business. If you have a public limited company, public being the operative word, it is easier for people to come in and out of the company. They can unilaterally, without involving the company, sell shares to other people. So there's a fluctuating base of shareholders, while for a private limited company, the shareholding is fixed. Not all public companies are in the stock market, but they have the ability, if they want, to list in a stock market. That gives the opportunity to everybody very easily to discover when there are shares available to buy and the prices at which these shares are available. But remember this, you can be a public limited company without being in the stock market. And you don't have to be if you choose to be in the stock market, you don't have to be in a specific stock market So not all British companies are in the London Stock Exchange. They can be in different stock markets. It depends on the rules of each particular exchange on the type of business that they will accept. In the US, in New York, you got a lot of Chinese companies that are in the stock. Key objective is to use this as a form of business. However, company organizational forms are not always to make money. You could use one just to organize stuff. For instance, if you run a university, right? It could be a non-profit company, but it could still be a company that is the organizational basis of an educational institution. If you have a block of flats and the tenants need to organize themselves, somebody needs to be a representative, somebody needs to deal with contractors, the maintenance of the building, usually there will be a company that deals with the management of the building. The aim of the company is not to make a profit. It is to organize how to run a particular task. You can have what we call community interest companies that are created to take care of a particular project within a community setting. We're not talking about charities just yet, because charities have got a completely different regulation and a different type of registration and all that. But we do cover companies that are with a profit incentive and those that do not have a profit incentive. And because I mentioned shareholders, perhaps worth saying that usually when a company is set up, it is divided into shares, the ownership of that company, and whoever purchases the shares becomes a shareholder. But it's also possible to organize a company not divided by shares, but when the people participating in it give a guarantee that they will pay a specific amount if it goes bust. If you have a profit intention, it is a better idea to have it divided in shares, because then you can use the shares to calculate payments and benefits back to the shareholders in the form of dividends. If it's a company registered by guarantee, then it probably does not intend to return money back to the shareholders. The guarantee just says, I signed a commitment of £100. So if this business goes bust, the creditors can come after me up to the level of £100. So that way you don't have to put any money up front, which might be attractive, but of course it's got consequences in the way that the business is set up and the purposes that it serves.